Hello, Jaguars. This is Fahad, and I'm back. I want to take a look at Biogen today. I think it's time to get long Biogen. That's the message over here. And so, as usual, as we do this in every time when we present a trade idea, and this is the critical backbone of how we do things in Jaguar Analytics, we're going to evaluate this opportunity based on the same three critical ingredients: fundamentals, technicals, and option activity. And it's a slightly speculative stock because I'm following a very concrete catalyst over here. We're going to dive into those in just a little bit. But I think that if the catalyst plays out the way I expect, you're going to be looking at some tremendous profit down the road. And so let's take a look at this and one by one and then see and then tell me what you think about this. So here's the daily chart. This is Biogen, all right? So let me show you what the weekly chart looks like, first of all. So here's like, what, 5-year weekly chart right here, all right? It has crashed big time. It has come down big time from as high of 480, which was a big blow-off top almost 2 years ago. And now it's trading right here around 270. The multiple, the price to earnings multiple at the time when it was up here was close to 30 plus, and the market cap was reaching $100 billion. And now the multiple on a forward 2017 basis is more like 12 times, 12.5 times forward earnings, and the market cap is $56 billion. And so the chart has been forming this huge base for a long time. It's now going on for a good, a year now. All right, so it's been forming this large base. And I think that it is done going down. I think this formation of this giant base is over. This is long-term weekly look. The MACD has been gradually improving for a while. RSI has been starting to turn higher for a while, and I think it's time for stock to start outperforming as well. So switching back to my daily chart. So here's the daily chart, right? I want you to focus on just the small little pieces here and there that you can pick up when you're looking at technical studies on different charts. Again, I don't have any moving averages over here. I don't give a crap about moving averages, as you guys know me very well. And so we're going to look at our own ways of how we evaluate technicals on the stock. See how it came down hard over here. After that, it made a lower low. After that, in October last year, it made another lower low. After that, in 2016, in February 2016, it made yet another lower low. And then it stopped making lower low. In March, when it pulled back, it double bottomed. Precisely within a few cents of difference, it double bottomed right here. And then when it recently pulled back, it basically made a lower high this time. All right? So this is what I call a large rounding pattern. Okay, this is a rounding formation on the daily chart that may not be very visible unless you go to weekly setup, and then you'll see in the weekly, this is, I believe, is starting to form this long, very large, rounding bottom. And then I think it's going to start to print higher highs and higher lows from here. So going back over here, see this big giant candle right here? All right, that was the earnings. When it pronounced the earnings, which beat on top line, beat on bottom line, and the guidance was raised. So we'll get to that in just a little bit. So we got some good history on the earnings coming too. So what I'm thinking over here, technically, this is a very nice candle. I like how it's shaping up. I believe the stock in a very short term is going to go and basically at minimum retest this high, which is from April 25th. All right, it's going to retest this, which is 285. Call it 285, 286. So that's about $15 to upside, call about 5% on the stock. So at minimum, I'm expecting at least a 285 retest. And then, but there's a very hard catalyst that is coming into play. And I believe if that catalyst is the way I expect it to be, then this resistance right here that's going to come into play is not going to matter at all. Because I think you could see this run all the way to 300, maybe potentially all the way to 320 and break out. So right now, nobody's talking about this. But if everything pans out the way I'm expecting, everybody will be talking about it on CNBC, on Twitter Finance, and every place else. So I would like to be positioned ahead of that. Slightly speculative in my nature. Trading options is speculative in general anyway. But I think that this one has that thing going for it, that if it works out, then consensus is going to move, and everybody will get excited on Twitter Finance and CNBC. and by that time the stock will be significantly higher. So my technical view, once again short term, I'm looking for an intermediate move to 285 to 286, which is a retest from April 25th. And after that, I'm looking for a move on good catalyst all the way, potentially all the way to 320, which is way up here. If it breaks out over here at 320, then you're looking at a huge gap entry, which is left behind all the way back from July of last year. That can possibly take this all the way up higher. I mean, there's nothing but just big giant air pocket. It could take this all the way higher to 385. That's way up there. So we're talking more than $100 to upside from here. But that's probably going to take 7 months and quarters, probably some more flows on good earnings reports, some several layers of bullish commentary from analyst community, some consistent excitement about what the company is doing and the pipeline and the growth rate before we get to this level around here around 385. So that's a very long-term view right there. Okay, so that's my technicals on the chart. Now on the option side, let me show you what I'm seeing. This is the option chain today. All right. If I expand this view to, let me expand this. So this is weekly, and let me go down over here, go all the way down to July. This is July, and watch what's happening right here. Now, some may think this is too small to worry about, too small to care about, but in July, with the stock at $271 a share right now, they're buying July 325 and 330 calls today. They're not spending a lot for it. In fact, let me just show you the picture of how much they're spending on this. Let's see. Let me pull this up right here. So, this is the, let me just maximize this. So, okay, so you can see that they're buying July 325 and 330 call. These are small lot sizes. They're not big. They're buying on wide bid and ask spread. The July 320s were bought, or 325s were bought for $1.85. July 330s were bought for $1.45. So they keep coming. They keep coming back and back, nonstop for them. These are small lot sizes. They keep coming for them. There was also some August 275 call buying, and I'm also seeing some action building in June 295 strike calls. All right, so they keep coming a little bit for it. Overall, the stock is trading about halfway through, at this is noon right now, but halfway through the trading session. The calls are trading already 1 times daily average call volume, with 91% of calls trading on or near the offer, and the implied volatility is starting to tick higher a little bit. So I find this a little bit unusual. It takes a special kind of an angle to flag something as truly unusual. Some people only like to go after big volume, which everybody gets very excited about. And I look for something where something is hidden, something is like sneaky and whatnot. And so this is one of those that gets my attention. This is July 325 and 330 calls. They're buying those. All right. And so they're basically looking for a move, going back to the chart, way up there, right here. That's 325 right here. I mean, the stock is right here. That's 325 right here, and 330 is right here. So they're looking for way up there to cross all this congestion area and make a move all the way up here. All right? And now, on the fundamental side of the thing, so what's going to take the stock higher there? I presented this Michael Yee, a biotech video over the weekend, and actually I posted that in the chat room on Monday, late yesterday as well. I don't know if you guys got a chance to take a look at it, but here's that not YouTube video. Here is Michael Yee, and what I want you to do is I have it set around 14-minute mark, 14 minutes and 7-second mark. Okay, this is where he starts discussing Biogen. I want you to pay close attention to what he's saying. It's only about a 2-minute clip because he talks about a lot of biotechs in this one. So from 14 to 16 minutes is a small clip about Biogen. Pay close attention to what he's saying. This is our fundamental view on this.
So if you do out the math, 33% of $1.3 billion divided by $21 billion in Amgen revenues, it's a pretty small impact, but I wanted to point it out for you. So bottom line is, we like Amgen. I think that they will put up a good Q2, and basically it's pretty much a great hiding spot right now in biotech. So that's what's going on. If you want some more detailed detailed conversations out of that, give me a call. Let's move to some other ones really quick in the last 5 or 6 minutes. Number 2 on Biogen. The key thing I need to tell you about Biogen is the Tecfidera scripts are actually growing 5% in Q2 over Q1 off of an easy comp. So if you actually look at the consensus, that would suggest a possible beat on Tecfidera for Q2 because Q1 is unusually low sales. So when you look at Q2, people only model up slightly over Q1, but the reality is the Q2 scripts are looking 5% growth over Q1. So the consensus looks too low for Tecfidera for Q2. So there's a chance that they could beat on Tecfidera in Q2. That's good news. That's why we like Biogen going into Q2. In addition, of course, the Lingo data is coming in Q2, and we are coming mid-year, and we think that there is a 60 to 70% probability the Lingo data will support evidence of why they should move forward in phase 3. If that happens, I think that Biogen will go up because I am convinced that the highest likelihood is that Biogen will take Lingo forward. If it goes to phase 3, people will construe that positively. There's a 20% chance on the downside that the Biogen Lingo data doesn't look good. If that's the case, the stock could fall to 225. That's only about 10 or 12% downside. And we said in the last video, if Biogen has negative Lingo data and the stock falls, I think that Biogen is going to be a potential takeout candidate, not immediately, but over time. And if the stock continues to lag, Biogen is a vulnerable acquisition candidate, primarily from Roche. I've said this many times. Let me go to number 3, Gilead.
Okay, so you saw what happened over there, okay? So here, Michael G made 2 very important points, and interestingly, both of those are not in consensus view. You know, I sort of sometimes take a look at what Michael G says. He's, by the way, in my opinion, probably the best one in the entire, all the analysts that cover the biotech sector. So I pay close attention every time when he says something. But he said 2 things about Biogen there that got my attention. The first one, he said that Tecfidera sales are running the weekly script data that comes out for all biotech, for all major drugs in the market. The Tecfidera script sales are telling us that they are running at a 5% growth rate, which is way above the consensus view. Consensus view is taking a view from what they saw in Q1, which, by the way, was a big beat, but it was primarily driven by price increases, not by volume increases. And so, in this particular case, Michael G is saying that Tecfidera volume sales have actually picked up and now running 5% year-over-year increase, which is not in consensus view. So when you take the volume increase, and on top of that you add the fact that the price increases are also being implemented every few months, that tells me that it's a perfect combination for Biogen to beat and raise big time the next time it will report. The problem, however, that's not all the way up until, July 20th or something like that. So that's even after July expiration. We're looking at 2 months out for that. So there's plenty of time to make a play on that. However, the consensus may pick up on this particular thing, by watching the script data, and may start raising estimates, potentially with upgrades coming and whatnot, all before the earnings. So you want to be positioned for that if Biogen starts to run higher because of that. To give you one quick thing, here is my view from on Biogen back. Here's my note from on April 21. So you can see that back then, when the company reported Q1 earnings, the stock was higher by 3.5%. This is what they reported: $4.79 EPS versus $4.46 estimate. It was a big beat. Revenue was basically, call it in line. When you're talking about $2 billion in revenue and you miss it by 20 million, I'm not going to go crazy. And so it was a slight miss, or you can call it in line. All right, and the Tecfidera sales were up 15%. But the most important thing on Tecfidera sales, and this is the point I'm trying to come back to make sure that you guys understand, that I stated right there on April 21st. To be fair, despite pretty decent report, worth pointing out that Tecfidera sales are now mostly driven by price increase instead of volume growth. And what they jacked up the price last time by 4% in 2015, December 2015. But what Michael Yee is telling me now is that price increases are still there, but they're seeing an increase in volume. So that's different. That's volume and price now both coming into play, which tells me that they're going to blow the estimates again out of water when they report earnings. Okay, so how is the consensus basically established for that? Here's a chart that I like to come back to all the time. It's a simple from Thinkorswim, from my trade account. See this? This is consensus view. So note, they just beat the consensus view and they raised the guidance, and now we have script data showing that the volume is rising, and yet the consensus has not changed. I mean, it's very minor. The fiscal year 2016 EPS view was about 1850 when the year started, 1852. Now we're slightly higher, 18.83. And the fiscal year 2017 EPS was $20.20 at the start of the year, and now we're at $20.10. So we're actually seeing the consensus view down by 10 cents for fiscal year 2017. That means consensus has not adjusted the numbers at all, despite what the script data is starting to show us. All right, so that's the other view that you need to keep in mind. That's why I believe that it's gonna be moved higher. Now, the second point that Michael G made was a very important catalyst, and that's the catalyst that I'm after, which is the Lingo 1 data. Okay, this data is expected to come out sometime in second half of 2016. We don't know what date yet. It could be out tomorrow. I don't know. It could be out sometime the last day of June. All we know is the management has said that this Lingo 1 data will be out in the second half of 2016. And so that's why perhaps these bulls, when you go back to this option chain and you look over here, these bulls are positioning in July instead of June. So if you once again go back over here, they're buying these way out of money July 325 and 330 calls. Okay, what is this Lingo data and why is this important? Michael G believes a 70% chance it's going to be very positive and the stock is going to respond very, very positively. Or there's a 20-25% chance that the Lingo data will disappoint. But if that happens, considering the stock is already trading at 12 times forward earnings, it becomes possibly an immediate M&A target by Roche that wants to enter into this business for a long, long time. Because let's say if the stock does go down by 10% on bad Lingo data, you're going to be looking at a stock that's trading at 10 times or 11 times forward earnings, which is going to be one of the cheapest in the entire marketplace. All right, in the big pharma sector. So that's what's going to happen. Now, to quickly show you one little thing, this comes from Leerink. All right, I just want to tell you once again, setting ourselves against the consensus view. Look what Leerink, and this is what the consensus is generally. It's not just Leerink. Look what Leerink is telling us. What do they have in the model? Okay, late stage pipeline programs included in current model. All of this. And here's the anti-Lingo data that's coming out in June, in Q2. Late-stage pipeline programs excluded from current model. And that includes anti-Lingo. It's just a point I wanted to mention that this important catalyst is coming out in the second quarter, and nobody has it in their model. It is excluded from the current model, which means the consensus view is depressed. They're not looking at it, okay? So let me get rid of that. I want to show you one more thing. And the last one actually comes from, where did it go? It was a very, very, let's see. I need to pull it up again. But there was a very, very bullish view that was presented by, I will put it in the email. I will put it in the email when I send this out. But take a look at one of the things that you're going to look at. In fact, let me just put it right here. In fact, right here. Here is the street research, my folder, and here's Biogen discussion, and here is the equity research. This is what I was talking about. All right, so this has come from Wells Fargo. This is a little bit old note, but it's very, very important. This was issued on December 3. I posted this back then when I was working at Option Master, and I told all of you guys to actually keep an eye on it. Wells Fargo was very, very early, but they made some very important point on it, and this is probably one of the best research notes I've ever seen any analyst present on Biogen. The line that gets my attention is right here. It says, once again, it's the major event. Late-stage opportunities in Alzheimer's spinal muscular atrophy and for its anti-Lingo remyelinating drug could all more than double sales beyond its MS franchise, and we believe that strong science and clinical trial design bode well for several programs. All right, this is a 40-some page file. You can go and take a look at all the things you want to take a look at. This is actually in my activity tracker. If you just pull up Biogen data on activity tracker, this research note is there. You can read it at your comfort. But it goes in very detail what this anti-lingo data is trying to accomplish. And right here is multiple sclerosis, anti-lingo right here. This is the entire Biogen pipeline. The phase 2 data is going to be coming out. But anyways, it talks about the trial design. It talks about why the response rate is so much better. We saw that in phase 1. It's going to be even better in phase 2. So all the data points are pointing out towards very strong lingo data. All right, so that's the key over here that I wanted to mention. Anyways, going back to this. So here's my view, right? Technically, I believe the stock is going to run towards 285 first, and after that, based if the lingo data is very good, I think you're going to see the stock run all the way up to 320 and higher. They're buying July 325 and 330 call options, and the last thing is you got Tech Fidera sales that is the script is tracking ahead of consensus, and so we got fundamentals, we got technicals, and we got bullish option activity. So how will I position for this? How do I want to trade this? It's very simple. The catalyst is going to be sometime in June, all right? And I want to go out to July, and I'm going to buy straight July 300 calls right here. I'm going to buy July 300 calls. The currently bid and ask is 470 and 540. I'm going to try, when I issue this alert, to get a fill at $5, all right? So right between 470 and 540. I think $5 is a good figure. Notice one thing, I am paying slightly less than, 0.3 delta for this. I usually like to go for a higher delta, usually 0.3 or higher delta. But that's because I'm willing to slightly sacrifice delta on this because I believe, first of all, the implied volatility is too low, which is at 35%. I think this implied volatility will start to move higher as we get closer and closer to the anti-lingo data. And as the implied volatility goes higher, the delta will actually increase in value. And the second thing I will mention is that we are talking about a very specific catalyst over here. And so sometimes you're okay going with a low delta play just because if you're expecting a significant move to the upside. And in this particular case, I think you could see possibly as much as 15% move to the upside in the stock. So I like buying straight July 300 calls. I know it may seem a little bit too far out, but I like to buy straight calls in this, no spreads required. And I want to buy the July 300 calls for $5 to $5.20. I'll present that in my alert, and we'll go from here. That's it.